Alright, so tomorrow we're going to be playing this game called Build Your Stacks, and I just want to show you just the basics of how it is played. So the website is buildyourstacks.com, and that link of course will be shared. And when you first go in, you'll either have a choice to click play in group or play alone. When you guys are playing, you're going to click play in group, and that way we're going to compete against each other. But for this demo now, I'm just going to do play alone because I don't want to set up a group. So when you hit play in group, there'll be a code that you have to put in. You'll put in your real name, obviously, and then the steps will be very similar. So I'm hitting play alone. And basically, I will just share the basics of what this is saying. It's saying you have 20 years to make some money. Every 6 months, you get paid and you get money that you can invest. You're going to get 7 different types of investments that you can invest in. They're all investments that we've talked about at least briefly over the last couple of days of class. So those will unlock throughout the game. There'll be a little mini lesson to kind of explain how each investment works, so you will get a little bit of a heads up. And then that has little help buttons, so at the corner of any investment you can click the question mark and see what's up. There are all these different things that you can toggle between. I'll show you this as we're going. There's a leaderboard, there's achievements, there's a view to see your portfolio. And without further ado, we will start going. So the first thing that we start with is a savings account. So the savings account is going to pay interest, and just like in real life, it is safe, it's secure, you're not going to lose any money. So starting off, you can see time is starting to click down. I'm going to go ahead and deposit all of my pocket cash. So you can see over here I have pocket cash and overall net worth. I'm going to deposit that $4,000 into my savings account because that's the only choice I have right now. So it'll start building value over time. So you can see there's a leaderboard here. Right now it's just me against the computer. There's some achievements that you can unlock as you go. And then now I got another $4,000, so I'm going to deposit that $4,000 because again, I got no place else to put it. I might as well deposit it in my savings. So, you can see it kind of goes kind of slow at first because you only have the one thing to do. But you can see my net worth is growing as my investment is growing, as I'm earning more interest on my savings account. So now the second year is going to come along, and now I'm going to be able to invest in CDs. So CDs, again, are guaranteed. You have no risk of losing any money. So when a new investment comes up, you can see down on the bottom, it says new investment opportunity available, unlock. You can't invest in it until you unlock it. And now we'll get an explanation. So you're buying a savings certificate with a fixed interest rate, a fixed period of time. The interest rate is going to be higher if you invest for longer. The first thing said also, if you withdraw your money before the term is up, you'll be charged a penalty. So you want to make sure you're not socking anything away that you're not going to need. So just to buy, I'll show you how to buy it. It's not too hard. The one thing about CDs, again, is you don't want to put anything in it that you're not going to need later. What I haven't told you yet about this game, and here's where we see the first thing. You're going to get thrown these little curveballs. Some of them are good, some of them are bad. So some of them you're going to get money, but on this one, for example, you have to pay money. You're joining a fencing club, you have to pay your dues. So I have enough pocket cash to cover it, so I'm going to click pay with pocket cash. If I did not have enough pocket cash, I would have to withdraw money from somewhere. So let's see. So I can see the different rates for the CDs by clicking. They're not too great. They're all right. So let's see, I'll buy $6,000, $6,000 in a CD. I'm going to deposit the rest into my savings account so that I continue making interest on it. I'm almost at the end of this first year, or the second year actually. So now there's another investment coming in, and I've got more pocket cash. So let's see what this new investment is. All right, this new investment is an index fund. So we have a mutual fund to invest in. Like we said in class, this is a nice, safe way to start investing in the stock market. So this is an index fund that will, I believe this is one that is the S&P 500 stock index. So it's saying, this is pretty safe. It's diversified. If one stock crashes, then hopefully you won't lose as much money because the rest of them shouldn't crash. So this is great for long-term investments. You just kind of put money in it and you set it and forget it. Got it. All right, so now let's see. Oops. Invest in a friend's restaurant. Oh, I've got to invest in this friend's restaurant. So I'm going to pay that with pocket cash again. So you can see, if I didn't have the money, I'd have to withdraw it maybe from my savings account. So at this point, I'm going to withdraw a little bit of money from my savings account. So you can see you can take money out just as well as you can put it in. And I'm going to put that 57.43.60 into my, oh, what did I just do? Oh, I must have just got more cash in right at the same time that I invested. So let's invest more. There we go. So I've got this money over here growing in my CD. And now look, you see how it's kind of like bopping around and saying collect? That means I can cash it out without having any fees paid. So I'm going to collect that, because if I don't do that, it's just going to sit there. It's not going to make any more interest. So that money will go into my savings account, or actually it goes into my pocket cash, and now I have to decide what to do with it. But there's a new investment opportunity, so let's take a look at that. All right, so now we get to invest in individual stocks. So like I explained yesterday, this game is a 20-year window of real stock market data. So it's saying, all right, let's go from 1986 to 2006, or 1999 to 2019. And it's actually using the real data for that 20 years to run this game. You just don't know what window you're in. So the stocks themselves are going to be fake names, but they're actual real stocks, and the numbers in here are the real performance that that stock went through in that 20-year window. So we can try to invest in these stocks and see how they go. Obviously, in this game, we can't do nearly as much research as we'd want to, but that's just the way it goes. All right, so I got 5 different stocks that I can invest in. And you may sort of think you can guess what the answers or what these companies are based on the names, but in all the times I've played this, I very rarely actually guessed the actual company. So don't make any assumptions here. All right. Uh-oh, I've been served. I've got to pay $10,000. Oh, well, thank goodness I was lazy about investing. I've got that in my pocket cash. All right, so I'll pay that. Again, if I didn't have that, I'd be withdrawing it from somewhere else, right? So let me put a little bit of this money. I don't want to put too much in stocks right away. So I'll put some money in my index fund, and then I can go through, and I like to buy stuff after it's had a bad day. I like to think of it as buying stocks on sale. So I'm going to wait for a couple of these to take a little dip down a little bit. I like that one there. So if I click on 25 and click buy, it'll buy me 25 shares of the stock. So you can see I've made a profit there. Oh, I had more money come in. You can see it starts getting, oh, I got to pay another bill here. I got to buy a new water heater. You can see it starts getting a little hectic because now I've got almost like I can't keep up with my money. So let me put no, I don't have $7,000. Let's put 5,500 into my index fund, and then I can play with the rest of it. Let's see what these stocks are doing. They all keep going up. We must be in a really good cycle here. So you just kind of have to decide, what do I want to do with my money? When do I want to do it? And that's basically how it goes. So as the game goes on in the next couple of years, there'll be treasury bonds that you can buy. Those are those federal government bonds. The next one after that that's added is some sort of crop commodity. So it'll be like wheat or corn or soybeans. And then the last one that's added is gold. So you can invest in gold if you want to. And then it just kind of keeps going through the 20 years. You can decide how much you want to invest in stocks, how much you want to invest in mutual fund and commodities, etc. There's no rule about how much or how little you can invest in different things. You can always pull the money out if you need to. You can buy and sell, or you can just kind of buy and sit. But that's basically how the game works. And then at the end of the 20 years, it tells you how much money you've made. It'll tell you how much money you'll still have if you let it sit longer until retirement. And you'll see the leaderboard, and you'll see how you placed in terms of your classmates. Oh, I got one more thing to buy. Look at this. All right, so with that, I'll sign off. You guys don't need to see me play the full 20 years. And that is it.